Hello class, welcome to lesson 3 of topic number 5, which is share capital. Share capital. In this lesson 3, we will look at the prospectus. We shall look at the company's prospectus or prospectuses. And in respect of the prospectus, we will define the prospectus, look at the essentials of a prospectus. Then we will look at the contents of a prospectus. Then we will look at criminal liability arising out of the issue of prospectuses. Then I will also look at the civil liability arising out of the issue of prospectuses. Then I also intend to look at the purchase of shares, the purchase of own shares by a company. Then finally, we shall look at payment of dividend and the dividend rules or rules relating to the payment of dividends by a company. So let's begin by where we want to describe or define a prospectus. Now, when you look at our act, that is the Companies Act of 2015, it does not give a very clear prescription or description of what a prospectus is. It talks about a prospectus, being a notice, being a circular, or any advertisement issued by a company, offering securities to the public, for subscription. So quite a number of words have been used to describe this document, that it is a prospectus, that it is a notice, it is a circular, it is an advertisement. Should be an R there. It is an advertisement issued by a company offering securities to the public for subscription. Now, what we conclude is that there will be no specific format that this document, that is the prospectus, may take. That it could be in the form of a notice, it could be in the form of a circular, form of an advertisement. Simply put, no specific format that we expect of prospectuses to be taking, provided that it is a document containing those specific contents as we shall be discussing later on today. And then what it is doing, that this document is inviting for subscription. It is inviting the members of the public to subscribe for the securities of the company. So the test of what the prospectus is not much on the format of the document, but specifically what the document does. That it is a document inviting for subscription, inviting the public to subscribe for the company shares, and that of its contents. That the contents and what the document does is the test of what a prospectus shall be. Now, there is this term that we are using here, the term offering securities of the company, offering securities of the company to the public for subscription. Now, the term offering, as used in this description, is not in its strict legal sense. In the strict legal sense, when you talk about the prospectus offering for subscription, you would imagine the issue of the shares or the prospectus being an offer for the company shares. It is actually not. It is an invitation to treat. it is inviting, the prospectus invites potential subscribers to make offers by making an application for the company shares. It is until when these applications are received, when the company makes an allotment, the offer by way of application is accepted by the company by allotting shares. So the prospectus is in itself is an invitation to treat, not an offer. Though in this description, we are talking about the prospectus offering. So that use of this term offering is not in its strict sense. We are also making reference to this word public. And the question would be, does a prospectus have to make an invitation to the entire republic? Does it have to make an invitation to each and every person? Now, common law, by way of courts' decisions that we have received from courts, the suggestion is that the reference to the word public does not have to include everyone. That the invitation to the public will be sufficient even where a section of the public is targeted. So if we have a company issuing shares and the only places where this prospectus has been circulated is Nairobi, now the question will be, was that a public issue? And the idea is, since Nairobi is part of the general public in Kenya, then that is a public issue of the prospectus. Even a section of Nairobi residents receiving the prospectus, it would still qualify to be an issue targeting the public. So this document is taking no specific form. We are judging what it is by what it does and its contents, that it is issued inviting members of the public to subscribe for the company's securities such as shares. And then we look at the contents as we shall be discussing them later. Now, let's go to the essentials. When a prospectus is issued, there are specific things that it must come along with. There are specific things that the prospectus must demonstrate. The essentials of a prospectus. For instance, we are saying that all prospectuses must be dated. They must contain a date. They must indicate a date. And the idea is this date that shall be contained in the prospectus shall be assumed, shall be considered to be the date of issue of the prospectus. All prospectuses must be signed. All prospectuses must be signed. Now, one of the persons to sign the prospectus will be any person named as a director. Any person named as a director by that prospectus must be signing the prospectus. The idea of them signing is considered to be them giving an authority or giving their consent for the prospectus to be issued, which is important. Any person or any expert who was issued a statement. Any expert who was issued a statement. So sometimes when you're issuing prospectuses, you may want to get some experts to give their opinion on certain matters. It could be about the evaluation of the company's assets. It could be about the prospects of the company's business. So when you get such experts giving statements about this prospectus, then you also get them to sign the prospectus, and particularly a copy of the opinion or the statement that they have endorsed. This endorsement or this signing is seen as giving consent to that statement being issued to the public for consumption. The other thing that will also be part of these prospectuses would be endorsements or attachments. Attachments to the prospectus. Attachments to the prospectus. This could be any expert opinions or expert statements that have been given in relation to the issue of the prospectus. It could also be financial statements of this company issuing the prospectus. Then finally, we must also have a statement. We must have a statement issued. To the effect, a statement to the effect that a copy of the prospectus, has been issued to the registrar. That a copy of the prospectus has been issued to the registrar. Now, this is the issuing of the copy of a prospectus to the registrar is a protective measure that the registrar's office is a public office that should receive this document for purposes of confirming, for purposes of ensuring that this document is compliant to the provisions of the law. So that if you are issuing a copy of the prospectus to the public, and we have a statement in the prospectus that says, we have also given this copy to the registrar, that the registrar has authorized the issuing or the sharing of this document to the public, then it inspires confidence to the public that this document that is being issued by this company in respect of the subscription of particular securities that they are issuing is a compliant document. So this should be some of the essentials we are expecting this prospectus to manifest. Now, I want to discuss the contents of the prospectus. Contents of the prospectus. Contents of the prospectus. Now, if you know why this document is being issued, then it becomes very easy to anticipate some of the contents or the contents that you expect to find in this document. We are issuing a document to the public to share with them all the necessary information that they need to enable them to make a decision on whether they are going to buy, they are going to invest, they are going to subscribe for the shares of this company or any other form of security that this company could be issuing. So imagine yourself as the investor, and we are issuing a document that should give you information sufficient enough to base your decision on whether you're investing or not. So question would be, what kind of information do you expect that we should share in that document? Now, part of the contents or part of the information that we should be sharing in this document will be information relating to the company itself. We shall also be sharing information relating to the management of the company. We shall also be sharing information relating to the securities that we are issuing, so that all these pieces of relevant information will be enough or will be consumed by the potential investor in determining whether they are going to invest in the securities that are issued by this company. So what are some of the things we're expecting to find? You expect that the prospectus will tell you something about the company's preliminary expenses. The prospectus will also talk to you about the remuneration of promoters. This prospectus should also tell you about any founders' shares that have been issued to management. It should also tell you about the particulars. It should also tell you about the particulars of directors. So what are the names of these directors, addresses, including occupation. So what else do they do when they are not directing this company? This could be a good test for the experience and the exposure these directors have. You would also need information to do with the director's remuneration. The director's remuneration. So how much are they paid to manage this company? You would also give information about directors' share qualification. So does this company require their directors to take up some minimum number of shares as part of their directors' share qualification? It makes the directors part of the membership of the company. You may also have requirements relating to the securities themselves. So the rights conferred by the shares. So we are going to buy shares. What rights do these shares that you are issuing grant us? Opening and closing of subscription lists. So when can we start applying for these shares, and when will they close? They should also tell us about the minimum subscription. The minimum subscription. This is an amount out of the total amount of capital that the company wishes to raise. They will indicate the minimum amount that they must or they consider should be raised in this issue. That is the amount that the company is thinking would be good enough to have some working capital, good enough to meet any costs of this issue may have come with, any pre-incorporation, any preliminary expenses that may have been incurred. So they should also be stating this, the minimum subscription expected from this issue. It will also be important to be told about the auditors of the company, if any have been appointed, auditors of the company. We can also be told about any material contracts. We can also be told about any material contracts entered into matters relating to shares that have been issued otherwise than on a cash basis. Basically, what we are saying that this prospectus should be giving us information relating to who manages this company. What kind of shares are we buying? What prices? When do we start buying? What kind of rights are they giving us? Then the company itself. How long have you been doing business if less than 3 years? Have you entered into any material contracts that you think we should be disclosed in this prospectus that we should consider when investing, when purchasing the securities of this company? Basically, it is information good enough to enable a potential investor to base their decision on whether they are subscribing or not subscribing for the shares of this company. Now, the issuing of a prospectus, actually the preparation and the issuing of a prospectus is subject to very strict rules, such that we have a lot of liability that has been created in relation to the preparation and the issuing of prospectuses to ensure that companies comply with these rules. There will actually be liability on the part of directors, part of experts, or any persons who have been named as directors in this prospectus for non-compliance with some of the requirements of the Act relating to the issue of the prospectus. It is that liability that I now want to discuss in relation to the issue of prospectuses. Let me begin with the criminal liability. Criminal liability relating to prospectus. Criminal liability relating to prospectuses, where we are saying that it is an offense to do what? So for certain things that we shall do relating to the issuing of prospectuses, the Companies Act considers them criminal, considers them an offense for which a fine shall be imposed on the defaulting officer of the company. For certain things that we may omit, during the preparation and the issuing of the prospectus, the Companies Act considers them an offense by way of an omission, for which a fine shall be imposed on the liable officer of the company. So I want us to consider some of these things that under the Companies Act are considered a criminal offense, either when done by the company or the company's responsible officers, or when not done in relation to the preparation and issuing of prospectuses. Now, we are talking about one, it being an offense to issue a prospectus, a copy of which has not been presented, to the registrar, a copy of which has not been presented to the registrar. This is just a legal expression to say you are not supposed to issue prospectuses when you have not given a copy of that prospectus to the registrar. So when the company's officers proceed on to issue prospectuses to the public, when a copy of that prospectus has not been received by the registrar, then that is going to be an offense for which the company officers responsible are going to be liable to pay a fine. It shall also be an offense to invite for subscriptions, of company securities, subscription of company securities unaccompanied by a prospectus, So this rule or this offense is simply prohibiting any invitation to the public for which no prospectuses should be issued. So if you are targeting any public invitation, then that invitation must be accompanied by the issuing of a prospectus, where we are saying it is going to be an offense to the responsible company officers where they are inviting for subscription of the company securities where a prospectus has not been issued, where a prospectus is not accompanying the invitation for the subscription. To further offenses, where we're saying it is also going to be an offense to, issue a prospectus, containing an expert statement without their consent, Now, what this offense is prohibiting is the issuing of prospectuses that purport to contain opinions or statements given by experts, where the consent of that expert has also not been obtained. So if you are to issue a prospectus with an opinion of an expert accompanying it, then also get the consent, the endorsement of that expert to go along with the prospectus, so that this offense says or prescribes that it is going to be criminal to issue a prospectus containing a purported statement of an expert whose consent does not accompany the prospectus. The other offense is that it is going to be an offense to issue a prospectus. It is going to be an offense to issue a prospectus without the necessary attachments or endorsements or annexures, as we call them. An attachment is also known as an endorsement or an annexure. So what kind of attachments are we thinking about? So those prospectuses that have expert statements must also be accompanied by the written consent of such expert, such that it is criminal not to have that attached. Prospectuses that are carrying with them financial statements, those financial statements will be an annexure will be an attachment to the prospectus, such that it shall be an offense not to have those financial statements attached to the prospectus if this company is to issue that prospectus. To more of those offenses, we have some more. Should be number, this is 4, should be number 5. It is an offense to issue a prospectus. It is an offense to issue a prospectus containing an untrue statement. It is an offense to issue a prospectus containing an untrue statement. That it shall be criminal to issue a statement or to issue a prospectus containing false, incorrect, wrong statements. This is intended to protect the consumers of the information from misrepresentations. That you are not going to make prospectuses and issue with it misrepresentative statements, statements whose truthfulness you cannot account for. Now, this liability shall be to the person issuing the statement. That the person issuing the statement that turns out to be untrue shall be the person to whom criminal liability in respect of the untrue statement goes to. Now, we have some special circumstances where these persons issuing untrue statements could also have some reasonable defenses against any action brought under this offense, where we are saying a statement was issued in the prospectus, and this statement turned out to be untrue. The statement turned out to be a false statement. Now, the person issuing the statement could come in with some very good defenses, such as where they are saying they had all reasonable grounds to believe that the statement was true, and actually they believed the statement to be true. In that case, their liability for the untrue statement would be extinguished. We also have circumstances where an untrue statement has been issued and the person issuing the untrue statement has also withdrawn such statement and given reasonable public notice, so that their defense is, at the time when they issued the statement, they believed it to be true. When they realized that the statement was not true, they withdrew the untrue statement and issued reasonable public notice of their withdrawal of the untrue statement. So class, for all this conduct or omissions, there is going to be criminal liability imposed on the responsible persons by the law relating to the prospectuses. I now want to discuss civil liability. Civil liability. Under civil liability, we are looking at third parties. Any third party who suffers loss, by reason of relying on an untrue statement contained in the prospectus. Any third party who suffers loss by reason of relying on an untrue statement contained in the prospectus. So they have received the prospectus, they have read the prospectus. The prospectus did contain a statement that was untrue, that they relied on to make a decision to subscribe for the shares of this company. It is as a result of that subscription that they are saying or claiming that they have suffered loss. They have civil liability both as at statute and at common law. They have They can claim both under statute and at common law. At statute, they are claiming for compensation. They will be claiming compensation for loss suffered, where under common law, they shall be suing for damages. They shall be claiming damages for misrepresentation. They shall be claiming damages for misrepresentation. It is also possible that they can claim rescission of contract. This is rescinding the contract of the purchase of the shares. That at common law, I bought shares on the faith of a statement that was contained in the prospectus, and this statement has now turned to be untrue. The innocent party, the suffering third party, may be claiming rescission of contract. I want to rescind the contract of purchase of shares on the basis of the misrepresentative statement, on the basis of the misleading statement contained in the prospectus. They could also be claiming damages, monetary compensation for any particular loss, monetary loss suffered. That is under common law. Then we are saying, as far as the Companies Act is concerned, it provides for a possible compensation that can be claimed by the suffering third party from specific persons. So who are these persons that we could be claiming compensations from? Persons liable for untrue statements contained in the prospectus. Persons liable for untrue statements contained in the prospectus. Now, we could be claiming compensation from every person who was a director, at the time of issue. Every person was a director at the time of the issue. We could also be claiming from every person who allowed themselves, to be named as directors, who allowed themselves to be named as directors. We could also be claiming from every person who had agreed to become a director, after some time. We could also be claiming from every person who authorized the issue, of the prospectus. Every person who authorized the issue of the prospectus. So that is the spectrum of all persons on which this civil liability is lying on them. And these are persons under the statute that we can be claiming compensation from. So class, that is the story of the prospectus. It should be bringing us to the end of this third class. Just to recap what we have done, we have looked at what the prospectus is. We have also looked at the essentials of a prospectus. We have looked at the contents of the prospectus, which are primarily supposed to give the potential investor all the relevant information they need in order to base their decision on whether they are going to buy the shares or not. Then we have also looked at the liability in respect of prospectuses, criminal and civil liability. This liability is for the purposes of ensuring the requirements of the Act in relation to the preparation and the issuing of the prospectuses have been complied with. Thank you very much.